Morning again, everyone, and thank you for joining today's workshop. Same like all the workshops, we will have a short introduction and then we will, dive into the workshop. My name is Vartiya Andreasyan, and I'm a business counseling manager at PACE Business Development Center. As you may already know, PACE is a nonprofit community development organization, and we are actually we celebrated 50 years of service last year. PACE has many programs, including early childhood education, workforce development, energy efficiency, housing, business development, and many more. Through our Business Development Center, we support entrepreneurs in Southern California by offering business counseling, procurement assistance, and access to capital. I would also like to add that under the City of Los Angeles, PACE is hosting two BusinessSource Centers. City of Los Angeles has 10 BusinessSource Centers, so PACE is hosting two of them. It's Pico-Union Westlake and Hollywood Center. We are also an SBA microlender, EDA, and iBank lender, and as well as we are a certified CDFI. So this workshop today is brought to you in collaboration with the Citibank. We have Saloni Rodadia with us today, who will present today's workshop. And we also have Annabelle Santamaria. She is the market manager from City Community Investing and Development Group. She is also with us on the panel. In this workshop, we will talk about the differences between personal credit and business credit, why both are important for entrepreneurs, and how they can affect your ability to access financing and grow your business. We will also discuss some practical steps you can take to build and improve your credit and use it effectively as a business owner. So as always, we will have a Q&A session at the end. You please use Q&A box to post your questions. So I will monitor the questions, and if there will be anything that I can respond back, I will do it. Otherwise, we will let Saloni to address the questions. So that's all. I would like to hand it over to Saloni to introduce herself and then get us started. Thank you, everyone, again. Thank you, Saloni, and thank you, Annabelle, for bringing this to us. Thank you.
Okay, awesome. Thanks, Vartiya. I'll go ahead and introduce myself. Really excited to be here. My name is Saloni, and I currently work at Citi as a senior analyst in the corporate banking division, which primarily supports all of our businesses across different industries as they grow, apply for credit, and really navigate the financial systems, right? I get to firsthand see how incredibly important credit is, not just personal credit, but also business credit. And one of the biggest differentiators between businesses that grow smoothly and those that constantly struggle is just how effectively you manage and build that credit foundation. So I think today, as we go through the materials, I want this to be a very interactive session, just to make sure that credit reporting feels a lot more clear, accessible, and actionable, so that by the end of this session, you'll know exactly how to strengthen that credit foundation and position your business for success. But excited to be here. If we don't have any more questions, I can get started and share my screen to just flip through a couple of materials, if that's okay.
Sure, please go ahead.
Awesome. Perfect. Give me one sec. Let me know when you guys are able to see it.
Yes.
Okay, great. Yeah, I think, like I said before, this is just kind of a super high level agenda, but happy to kind of pivot and make it more flexible based on whatever the audience would like to focus more on. So feel free to stop me at any time in case you have any questions, or if there's anything more of that you want to hear of or clarify, etc. But big picture, I think we're just going to go through a lot of the credit reporting and just business, what are the impacts of personal credit, why is it important to have a good personal credit, especially in the earlier stages for your business, then slowly pivot into business credit reporting, and go through the different metrics that lenders evaluate to see how credit worthy you are. And then lastly, go through like a couple ancillary items about credit reporting and business operations. And then we'll go through, reserve the last 10 to 15 minutes for any questions and answers. But like Vertuhi said, if you have any questions, feel free to also just unmute and, or raise your hand or just drop it in the chat so that we can also just pause midway and answer anything. But yeah. I think I just went over like some of the learning objectives. So this should be kind of like the goal or like the key takeaway at the end of the session. But I think to start off, I think I'll just focus on like credit, right? Essentially a very important financial tool that allows individuals and borrowers to like borrow money or access goods and services with a promise or repayment in the future, right? And I think it sounds really simple in practice, but it really comes down to a measure of trust and reliability in managing all these like financial obligations. And I think for small businesses, especially like establishing and maintaining that good credit is fundamental for sustaining like operations, like expanding and just weathering any financial challenges that might come. And this involves managing credits, making timely payments, and demonstrating just a consistent ability to repay debts. And just to kind of tie this to my current role, like we analyze like the large cap companies, right? And they have like massive cash flows, but even then, like we're very, from a risk perspective, we make sure that they have enough liquidity, they have enough cash flows to kind of, serve those upcoming debt obligations that are coming due. So I think especially for small businesses, this becomes extremely important because unlike the larger corporations that have had like decades long of like, just a track record, we obviously don't have that yet, which is why like it becomes super important. And I think when you think about distinguishing between like personal credit and you know, business credit, it's really essential because your personal credit obviously pertains to like your individual financial activities, like personal loans, like credit cards, like mortgage payments, etc. Versus business, on the other hand, focuses really on the financial performances and obligations of the business, right? So while personal can influence business credit worthiness, establishing separate business credit is crucial for protecting those personal assets and fostering the growth for the business. So building that strong business credit really involves like, opening accounts in the company's name, making payments on times and, maintaining that positive financial record. And that's how we now come into, we went through like, just the basic definition of like credit, like what the differences are, why is it important? Like we said, right, like any business that's trying to grow in scale really needs to access that financing. You need to access that financing, not just to get the money, but also make sure to get that money at like a cheaper cost. Um, the second part of it is kind of just like a credit cycle that involves like acquiring any manufacturing, like any inventory, like purchasing those equipments. And then lastly, just like once you are done with all that, really managing that working capital, right? Um, Here's kind of like a spectrum that puts it out really broadly on how the two are intertwined. And you'll see that although they're extremely separate, they do influence each other a lot. And before you have the business established, you want to make sure that your personal credit is important and it matters a lot because that's what lenders will be focused on, right? To see like how you've done in the past with your own personal obligations. And then as you move towards more on the right side of the spectrum where you see like these large sophisticated businesses that may not really rely on the business owner's personal credit history, that's when business credit starts becoming a lot more important. Um, so I'll just throw out a couple questions here in case anyone wants to just unmute. Like I said, I want this to be interactive, but have you applied for any business loans or lines of credit in the past? Like what information and documentation did the lender obtain? And, did the lender kind of convey that to you that they'll be interested in, knowing your personal history if you were a small business that was just starting out? If anybody wants to chime in.
Anyone, if you want to, I can unmute you. Just raise your hand and I can unmute you, or you can use chat box. You can write it there. Any which way, which is more comfortable for you.
And we've got a big forum here, so would be also helpful for the others to kind of learn from your experience if there is something that you want to share.
Okay. Okay, there is one attendee, and
Okay, great.
let
Yeah, feel
me,
free to unmute
yes.
yourself.
Please unmute yourself, Catherine, and ask your question or share your experience.
Certainly. My name is Kathy Bazan. And when I was just starting out in my business, I found that there were 10 different companies that would that would open, very small accounts. One of them was Deluxe, the check company. There were a couple of other companies as well that did um, branded T-shirts, business cards, etc. So I could open small accounts for, say, $200, order checks for my business account, pay that off. They would report it to the business credit bureaus, which are different from the personal credit bureaus. And over time, making these dinky purchases and paying them off immediately, I was able to build my credit and then be able to do more things with the business. I hope that helps others.
Thanks so much, Catherine. That was super helpful. I think, like she mentioned, right, like you really start small, and this goes back to like the Spectrum page where aspiring like entrepreneurs, like emerging businesses, they will rely on like the personal credit. And then as they like grow older, you'll see that all of it gets reported to like the Business Credit Bureau that I'll go into a little bit more detail throughout the session later. But thanks for sharing. That was super helpful.
Thank you.
Okay, awesome. I think we can move on. But section two really focuses on let me quickly go back to this one. So I think we didn't touch on what information and documentation did the lender obtain, right? So Catherine, feel free to chime in if you would like to share, but I think generally some of the things that they do require are like financial statements, like a business plan, really just outlining what your business model is, products and services, your tax returns, and this, if you're like a new business, obviously this would mean like your personal tax returns for the past 2 to 3 years. Um, any of like the personal credit reports to just evaluate your reliability as a borrower, and as well as these credit reports that, show a story of your credit score, your payment history, any outstanding debts, any like derogatory marks, um, like bankruptcies or collections, etc. And then your bank statements. A couple of the legal documents that they usually ask for is just like business license. And if you're applying for possibly a secured loan, which will be a loan that's backed by some sort of like collateral, then you'll need to provide a lot more information, such as real estate, equipment, inventory, etc., which the lender can kind of claim on if they do default on the loan. I'll stop right here for Catherine to jump in and add if she'd like to share with the group. Feel free to unmute.
And call me Kathy unless you're upset with me. Okay?
Not at all. I'll
It's like
keep that in mind.
the longer your name gets, the madder your mother is, right?
That's true.
Okay.
I'll go by Kathy then.
Not a problem. Um, Normally, if you're talking about a bank loan, as you know, the bank will ask for your articles of organization if you're an LLC, your articles of incorporation if you're a corporation. They'll ask for your EIN. They'll ask for your business plan, marketing plan, which could be part of your business plan or could be a separate document. They'll ask for your financial projections for the next 3 to 5 years. And they'll ask for a resume for you, proving that you are the best person because of your education and your experience to run this particular type of business. So That way, the bank or lender, I should say lender, has a better feeling that you are prepared to run this particular kind of business, not that business over there. Did that help?
Yeah, definitely. I think that's super important and very spot on in terms of the formal application and the different types of like documentations that go into it. And I think lastly, just like the lenders or the bank's underwriting team, right? Like they'll really review that application and documentation in detail, especially for a small business where there's no kind of like a past track record. So this is what
Yeah.
really assesses your financial health, your credit history, and just the viability of your business plan. Um, but yeah, I think that was great. Thanks for chiming in. I think we can move on. So we talked on like the differences between personal business, how they influence each other, what sorts of like documentations are required, etc. We talked about like what really goes or like influences a personal credit report, but these are just like some key items from like a high level to see like what really goes into the report. And we'll pivot onto the major consumer like reporting agencies. And like mentioned on the slide, right, like these are also kind of known as credit bureaus that are key players in the credit system, collecting and maintaining all of the consumer credit card like information. And the three of the main ones in the US, as listed, are Equifax. This was, I think, one of the oldest and the largest credit reporting agencies, and it really provides all the credit reports, scores, just a lot of the monitoring services to both consumers and businesses. And it really just gathers all the credit data from like various sources, including like lenders, banks, and public records. And then this data kind of includes all of your payment history, how much of the credit has been utilized, the length of the credit history, and more. And sometimes these agencies also provide what's called like an identity theft protection service, and a range of like other business credit services, including like risk management tools. Similar to that Experian as well, like one of the older ones established in the 1990s, probably just another global reporting agencies that operates in like multiple countries, just offers like credit information and analytical tools to really help businesses manage credit risk and prevent fraud. Um, and then TransUnion as well, just another one that, talks about all of the educational resources to help consumers understand and manage their credit, as well as providing all of those like reports. But I think all this to say that these are just some of like the credit bureaus that are really keeping a close watch on everything that you're doing in terms of like your financial obligations. And when you look at a personal credit report information, right, like these are some of the examples that you see listed on the slide that goes into it. Um, so you'll see like from your personal standpoint, information around your name, social security, like numbers, your names of like current and previous employers, if you're married, like your spouse's name. Um, it also involves a lot of like the consumer statements, like charged off accounts, a list of businesses that viewed your credit report in the last 24 months when you applied for credit. So this kind of helps you as a business owner kind of put things into perspective on like where do I stand, like what's the perspective, etc. And then some of the public records that I mentioned earlier was around like bankruptcies and foreclosures collections, which also plays a major influence in this. And then the last thing I would say is um, these are some of the things to keep in mind when we think of some of the broader or like important things that don't go into a report. So just something to like, keep in mind when you're looking out or when you're starting new and are not really aware of like what kind of information, your medical history, income, business account, like all of this does not and like will not go into a personal credit report. Um, and I think lastly, I would also say that a lot of the services that they offer is around like monitoring credit activity, really just alerting consumers to like potential fraud or like identity theft. And consumers do have the option to dispute like resolution in case they see any inaccuracies on the report. And by law, these agencies they are supposed to like, investigate and like help you correct those errors. And understanding the roles of these major credit reporting agencies really helps us as like business owners to kind of manage that credit health and really just enable businesses to make informed like lending decisions. So yeah, one tip would just be to kind of regularly check your credit reports from these agencies just to help you maintain a good credit standing and just catch any discrepancies or inaccuracies early on. Um, and this is not to say that, it's always going to be like wrong, but this is your personal information, like your credit. So you should just be kind of mindful of like checking it and just making sure that everything stays true. And then lastly, I would say here's um this is the fun part on like the personal credit score, right? It's really just a numerical measure of all the things that we've talked about so far, right? Like how are these credit bureaus kind of assigning or making sure or tracking like how good or bad you're doing in terms of your personal credit score, right? Um, and this helps everyone, like the banks, the lenders, kind of measure the credit worthiness that's used by like lenders, landlords, and sometimes even employers to just assess financial risk. And it typically ranges from like a 300 to like a 850 with obviously higher scores in the bigger bubble as you see showing like better credit worthiness. And the most commonly used credit score is like the FICO score and the Vantage score that you see. And those are just like not to be like too technical, but just a couple of like credit models that show up on your credit report, which includes your payment history, like what amounts are owed, the length of your credit history, like new credit, the type of credit used, like etc. But this is just kind of a number that they assign, right? Like based on the information that you have on the report. But I think this is something that's a key slide, really important to see like what actually goes into these score models. And like you see it, I think pretty much for both the score models, like very standardized metrics that are used. So consistently paying your bills on time obviously positively impacts your score, right? Like late payments. If you miss any payments or you're making payments, that can significantly lower your score because that does have a 35% weight assigned in the score model. And severe defaults or bankruptcies obviously will definitely have like a substantial negative impact. The other is credit utilization, right? Like this ratio really compares or the outstanding debt that you see on the slide. And this ratio really compares like your current credit balances to your total credit limits, right? And keeping your credit utilization below 30 is generally considered to be like a good metric. And outstanding balances, like, high balances on your credit accounts can definitely like negatively affect your score, especially because it is one of those like highly influential metrics that gets into the total score model. Length, how long you've had the credit for, so the length of the credit, not a lot of weight as much as the past payment and the outstanding debt, but the score model still takes a 15% weight into it. So the longer your credit history, the better, as it provides more data on your borrowing behavior. Um, and I think the average age of all of your accounts here matters as well. And then in terms of new applications for credit, that gets assigned like a 10% score. So applying for new credits can definitely result in like hard inquiries, which may temporarily like lower your score, which is why like when you do open like a new account or like a new credit card, you'll see that score kind of like dip a little. And especially opening multiple new accounts in like a short period can be seen as like a risk. And then lastly, types of credit, not a lot of weight, only 10% as compared to like the other metrics, but I think having a variety of credit types, so whether that's credit cards, mortgages, auto loans, etc., can definitely positively influence your score as it shows up as you can it shows, right, that you can manage the different types of like credits responsibly. Um, and I think Vantage score not it was just kind of like a scoring model that was developed by the three credit bureaus and you know it goes hand in hand with the FICO, so like nothing anything crazy, just the way they put out is a little bit different than like the numerical value. And I think lastly, just like periodically, this gets updated to reflect any changes in the consumer credit behavior. And just increasingly used by lenders, right? Especially for consumers with like limited credit histories. So something to like really keep in mind. And I think you can also access the Vantage score through various channels, including the credit monitoring services. Like, it benefits consumers with like limited credit histories, like scoring is consistent across the three major credit bureaus. And then lastly, it really provides the tools to help consumers understand and improve their credit scores. But I'll stop here for maybe a quick 2 to 3 seconds to see if anyone has a question. I know that was
Um,
a lot that we
uh,
covered.
yeah, there was one question from Mauricio. He mentioned that I recently ran my business credit and was surprised that there was only a handful of accounts reporting, even though the company had several credit cards and has taken cash loans over the past 5 to 7 years. What should I have done differently to have more of these of fully good standing accounts? Mindful that the other participants make some suggestions. So and in the same time, I have asked Mauricio what was the type of her business, like his business legal entity. I just wanted to see like if it was a corporation. So he mentioned that it was one member LLC, and they are changing it to, like they have changed it to multi-member LLC in 2025. So
Got it. Okay. And
okay.
just to clarify the questions around just that the business itself had multiple, I guess, accounts open, but only some of them got reported on the business
Yes,
credit
that's
report.
correct. Yes.
Okay. Yeah, I think that's a great question. Sometimes when you check the business credit report, you'll only see like vendor or like trade accounts showing up, even though the company actually has like several other like credit cards open. And the reason is that not all the credit card issuers report activity to like, Experian, Equifax, or like Dun& and Bradstreet, like the credit bureaus. Um, I think your question around like what I could have done differently is probably just been a little bit more intentional about opening accounts with lenders that actively report to the business credit bureaus. And I think I also could have probably verified that the accounts were properly linked to the company's like EIN, which is the employer identification number, and business profile, just so that they do show up on that report. And I think another step would be to also ensure that the business had its like DUNS number in the business credit profile set up early and to monitor those reports like periodically. Um, but I think the key lesson is here just that simply having business credit cards isn't enough. You need to like really make sure that those lenders actually report to the business credit bureau so the activity helps build the company's credit profile. Is that helpful? Or did I answer it properly?
Mauricio, if you have like, let me see. Yes, he responded yes.
Okay,
So we
great.
have some other questions. Let me go through these before we move forward.
Sure.
How can you structure your business credit to not impact your personal?
Yeah, I think that's a great question, right? We talked about this, right? That in the earlier stages, obviously the personal affects business a lot, but I think how to structure a business credit so it doesn't impact, I think register the business as like an LLC or corporation, right? As you guys know, like as a separate legal entity. Obtain the first step is to obtain that early, not early, employee identification number early from the IRS, right? It takes like probably 5 minutes to do that. They're very quick in generating that. And then set up a DUNS number to establish a file with like Dun& and Bradstreet, right? Um, I think start with a net 30 like vendor accounts that report to the business credit bureaus. Make small purchases like maybe office supplies, like printing, I don't know, branded materials, and pay them off early or on time. And this builds kind of like, or just gives you like a kickstart to build that payment history. Um, under the business EIN and not under your personal social security. So I think that's an important step. And then lastly, just maintain two separate accounts for your business and personal bank accounts. Um, just showing that consistent revenue and cash flow and just really keep the business credit lines low utilized, I would say. And then lastly, like I mentioned before, just keep regularly checking all the credit reports. But I think the key here is just building a credit profile under the company's EIN, so it's not really tied to your social security. And then start with the vendor trade lines that report to the business bureaus, followed by, separating the business's finances, and then eventually qualifying for the credit products that don't really require a personal guarantee. Hopefully that's helpful.
Okay. There are two more questions. I will leave the question from Paris for later, like
Okay.
maybe toward the end. But there is one question from David. He asked, I was wondering if NAV was beneficial for building business credit. Also was wondering if trade lines are absolutely necessary to increase business credit, and if not maintained, will business credit go down?
Sorry, let me just answer the first question first.
Yeah.
So the question was around, you said NAB.
NAV, like I am not sure what they like this but it is like N like national, A like Apple, V like
Okay.
Victoria, NAV.
Okay, got it. And then the second question was around just the
About the trade lines, and if it will not be maintained, will the business credit go down? If it is
okay.
necessary to have a trade line, and if it will not be maintained, the business credit will go down.
Yeah, definitely. So, and just to confirm, like NAV is that fintech platform, I'm assuming that small businesses use to monitor and like build a business credit. Correct me if I'm wrong here. If you can just confirm, just so that I don't.
I I will check it. Give me a
Yeah.
second.
Yeah, I'm pretty sure it's almost like a credit karma, but for small businesses. If the person who asked the question can just confirm if that's what he's referring to.
Mm, let me ask him so. Okay,
Yeah.
David, can you just yeah, yes, it is beneficial, but you have to pay to play. Yes, correct. So, like, yes, he said it's correct.
Okay, yeah, perfect. Yeah. I think it's beneficial when building business credit, given it's kind of just like a fintech platform that really helps you monitor those credit reports across
Mhm.
like the major bureaus and identifying lenders and reporting that payment activity. And I think one advantage I would just say is like visibility. It helps business owners see like whether their accounts are actually reporting to bureaus like the three that we talked about. And this goes back to the previous question that someone mentioned where they were curious to see how a couple of their business accounts were linked, but a couple were not. So I think this gives them like a good visibility. But I think I would also say it doesn't really build any credit directly. It just provides like a monitoring tool. So that would be my take on NAV, like definitely helpful to just for a business monitoring purpose, but not really necessary for really like building that credit. And I think um on your second question, I would say, and just to go back on NAV too, right? Like, you can see some of the basic business like credit summaries, some of the personal credit data, like financing recommendations and basic monitoring alerts that are covered as part of like in the free version, I guess, but they also have like a subscription tier in case like you really want to go deeper into like the full business credit reports from the three agencies, detailed credit scores, like any trade line reporting tools, like all of that. I believe it's like $30 to $50 a month, depending on the level. But yeah, it's really up to your discretion to see and the scale of your business as well, if that's something that's like useful to you. I think the other question on if trade accounts are necessary, they're not really definitely strictly required, I would say, but they're often one of the easiest ways to just like kind of get started, I would say, especially for the newer businesses that don't really have that kind of track record. And because they do offer the net 30 payment terms, a lot of the traditional lenders usually require an established credit profile. So this is just kind of like an easy way to, get started, have those smaller vendor accounts, and just help create those initial trade lines that starts building and demonstrating like your payment history. But hopefully that was helpful.
Okay. So, helper services. Okay. Um, um, there, there is one follow-up question from Mauricio. He asked a question on linking business card, credit card account to EIN. Is this something that I can get done by calling up the credit card companies, or are there any recommended cards?
So the question, just to be clear, the question's around um how to kind of link the business credit card to EIN. Is that the question?
Yes, he wants to
So
know, like, if he already has the credit cards, and if does he need to call them to link the EIN to like a business credit card?
yeah, definitely. So if you applied for the credit card with your EIN, right, like the card should obviously automatically be linked to the business. If you applied using your social security, the account may report to like a personal credit instead. But I would just probably call the issue like the business credit like department, ask if the account can report under the business EIN that you just got instead of like your personal SSN if that's what you use. And some issuers allow updating the account to reflect the yen if the business is kind of like in a good standing. Um, and then ask which business credit bureaus the account reports to. Just confirm the reporting on it and make sure that the future balances or payments will appear under that credit profile. And then just have your EIN, your business formation documents, and then your DUNS number ready and handy whenever you speak to them. But some banks just require these to link the card correctly. But that would be my take on it.
Okay. There is one more question. I am not sure if you are like, you can respond to this question, or maybe, Annabelle can help us with this part. Does Citibank offer secured business credit to build the credit?
To like smaller businesses?
Yes.
Is that the question?
Yes.
Um, Feel free to chime in, Annabelle, but it Citi does offer like credit and loan products, but not in the same way as like a secured business like credit card, I think. And it offers like business installment like loans and like business lines of credit, which can be used for like working capital, equipment, etc. Um, but And I think if I'm not wrong, it also participates as like an SBA lender, meaning they can issue like small business loans guaranteed by like the Small Business Administration. So smaller or new businesses can qualify.
Yeah. Thank you for that, Saloni. You know, uh, if anyone is interested in learning more about, especially the SBA, feel free to send your info to Vartuhi, and I can see who on our side, on the small business or the business banking group, can help. For the most part, though, the size of the loans that well, I don't even know that that was a question, but the size of the loans that smaller businesses require, Citi doesn't have products for that, right? Because they're too small, just to speak frankly. However, we do support CDFIs like PACE that do make those that offer products that you could use. Now, when through education and Vartuhi's, training courses and things like that, as you move up and are ready for a larger size, then we can then we're more helpful in that area. For now, though, I think our investment is in organizations like PACE or PCR Business Finance, New Economics for Women, all of these wonderful organizations that offer those products that are better suited until you are ready for Citibank. Bartuhi?
Yes, I just wanted to add on that. I would say, even all the banks, definitely they have business credit cards when you open the your bank account, business bank account. The credit card is there depending on, maybe it's not immediately after, maybe 6 months, 1 year, depending on the policy of the bank, you should be able to get a business credit card. Generally, that's like how it works. But when it comes to, not business cards, but loan products, credit lines, then, it's a bit different because the requirement of the banks is different. At least they want to see that the business is there for at least 3 years to show, continuous, the tax return, the operation. While in these cases, organizations and CDFIs like us will come to picture to support those businesses because we can do like businesses, even the startups, we can do it. Of course, we have our underwriting like requirements. So it has to go through like underwriting, and we are looking to all the like 5 C's when we are doing the underwriting. But that like being new in the business is not a factor for us as far as you can, provide this, the documents and, that you have a strong case with the cash flow, with the projection, with your credit history, and there are other requirements as far as you can do it, and present a strong case. We are ready to take, even, startup pre-revenue and like new startups, loan cases or credit line cases. PACE, as of now, we are offering $50,000 credit line to new clients for PACE. And for those clients who had, loans with PACE previously, we can extend it to $500,000. So I brought this information because the question, was there, but generally speaking, we want to be more focused on the, credit side of, this workshop. So I will not talk more. If there is any specific question, please feel free to send me an email. I will share my email there, and, we can, just go back, and discuss the case. Thank you.
Okay, awesome. Thanks, Mertuhi. Thanks, Annabelle. If there are no other questions, maybe we can just keep going. I think what's a good personal credit score, right? Like we talked about like the different score models, and this on the slide, you'll see that as you move on the right side of the spectrum where you do have a higher score, you're considered to be a low risk borrower, right? Like you can access that financing at a cheaper cost, and it's just eligible for better rates and terms in the credit products versus when you're kind of positioned in the middle or on the left side of the things, you're more likely to be denied. And if approved, you may pay like higher interest rates. So just something to obviously keep in mind. And I think every 12 months from these agencies, you're eligible to require like one free personal credit report. And it's just the very classic like website that you see here, like the annualcreditreport.com. And like I said before, just keep monitoring these regularly and flag any discrepancies or inaccuracies that you see just to make sure that everything remains on track. And at the end of the day, like this is your information and you want to make sure that you're having like a good score. Um, I think just some other, providing copies, like requesting a new credit report to verify that the correction was made after you dispute it are some of the super like important things. And here you'll see like for those who haven't seen one yet, this is kind of like a sample report that goes through like different details and like what goes into it. So you'll see like potential negative items that they'll flag at the top, some of the accounts that are in good standing, like what are the public records, if any, listed in terms of bankruptcies or foreclosures, and then lastly, just like any requests for credit history. I think this is just some key items at the end of the day, right? Like really maintaining that healthy credit, keeping any outstanding like revolving debt balances low, just paying off any of the collections, avoiding negative events that could result in like a public record, and then just maintaining a mix of credit accounts just to show that you're able to manage different things and still be able to like do those repayments. I think lastly, to sum it all up, right? We talked about how when you're just starting out, personal plays an important role and you're just establishing it, you want to make sure that that personal guarantee is co-signing on the business loan. But like I know someone mentioned a question like earlier on how business affects like the personal, like I would just keep them separate because you want to be in a position where eventually when the growth phase of the business happens and you start accessing or growing the business, you don't want any personal assets protected against the business, right? So just something to keep in mind. Any questions or should I keep going?
I think we can continue.
Okay, great.
There was
So
only one question. Can we, you will share the presentation and we can send it to everyone.
yes, definitely.
Okay, thank you.
Okay, awesome. And then I think some of the business credit reports, right? We talked about like anything that applies to personal applies equally to the business credit as well. And this goes to all of the inquiries, the backgrounds, businesses, public record information, and everything. And some of the major players, like we had those other three credit bureaus here, we have Dun and Bradstreet that I've mentioned a couple times. Really focuses on how businesses interact with vendors and suppliers. Equifax and Experian, very similar to how they have it in the personal record. Business credit reports contain a lot of these other datas that you might not see in your personal credit report, right? And that's where you'll see that it provides a valuable information, right? You'll have your company name, your legal name, address, phone number, a numerical representation of the business like score. So you'll have all those risk scores, similar to how we had FICO and Vantage for our personal thing. And then details of just the credit accounts, including any lines of credit, trade accounts, information on like account balances, payment history, businesses like payment behavior, how late have you done the payment or how early. It also includes like collections or judgment against the business and records of like legal filings and judgments related to the business. A list of the companies or individuals that have requested a business credit report within a certain time. That's also something to keep in mind. And then lastly, I would say it includes details about ownership, management, and financial performance. And the use of business credit is to just really evaluate, similar to a personal credit, just that, if you have any supplier relationships, like suppliers may review like the report to just determine whether the extended trade credit terms require any upfront payments or if there's any flexibility in terms of repayments if you have built that good credit. And at the end of the day, you want to make sure that you're just strengthening these relationships with the suppliers, right? Like potential business partners who might like view this report and really assess your stability and reliability of the business before, um, kind of assessing the risk associated with investing or insuring a business. And then lastly, regulatory agencies and compliance professionals, they may use business credits as part of like a due diligence process to ensure that, you know, they've kind of complied with the regulatory requirements just to assess that stability. Um, so a really good way to just provide that valuable information. And I'll go next to an important topic on regulation. So a lot of the regulations around consumer lending, such as the FCRA and FACTA that we didn't touch on, they don't really apply to business credit. So to go back, the FCRA is the Fair Credit Reporting Act. And imagine like, Sarah wants to check her credit report just to see what information creditors are using to evaluate her. And under FCRA, she can request kind of that free copy, that we talked about like once every 12 months if you discover like an error on that report, like you've never probably opened, like under this kind of regulation act, you're allowed to dispute that inaccuracy, etc. Or maybe like say for example, you applied for a car loan and the lender checks his credit report to make a lending decision. The lender should have a permissible purpose under this FCRA to really access that report. Um, that doesn't apply to business credit. it still has its procedures in place just to kind of, make any disputes if you see any, or just determining how long the information is staying on the report, but the same regulation doesn't apply here. And then lastly, talked about the personal credit scores. Very similarly, you'll have the business credit scores, right? And these are also hand in hand go with like how they're tied with like the agencies. There's just a lot of types available, and they have like a wide variety of like scoring ranges and models that are used to determine based on all the details that they have. And like I said earlier, to answer someone's question, make that account really quickly just to link your business stuff into the credit report, just to make sure that everything that you are doing gets tracked and starts, developing that credit like early on. And you can also just set up like alerts and keep checking those scores in case you're interested in kind of like learning about and monitoring that like regularly. Um, and then I think this just goes over like high level metrics on like why one should establish one. And we talked about this, right, to strengthen that relationships with like suppliers and shipping companies to just make sure that your company is like a legal entity and reputable. So make sure to get that EIN early on, setting up as like an LLC, a corporation, whatever deems fit. Just really helping banks determine the approval and the terms of financing, because the more right side of the spectrum you are, you can get access to that cheaper financing. And then we talked about this earlier as well, so I'm just going to skip it to answer someone's question. But yeah, really important to just have that early on. And then similar to just how personal goes, these are just like some of the best practices to, just keep them separate, keep monitoring them, like dispute any inaccuracies you might have, etc. And then if anybody wants to take a stab at kind of answering this question in just in terms of like in next 5 years, how do you think having a healthy report can help your business? Like if anyone, feel free to unmute and answer.
Saloni, while we are waiting, if someone has, wants to share their thoughts, there was one more question. Ray
Yeah, go for
asked,
it.
what about using personal credit to offset business credit, especially when using personal credit accounts have a low or zero APR?
Sorry, could you repeat the second part?
He asked, what about using personal credit to offset business credit, especially when using personal credit accounts have a lower or zero APR?
Yeah,
So he wants to like use the personal credit instead of business.
yeah, I think that's a good way to think about it. But like I said before, right, using this can help short term, but it comes with a couple of trade-offs. So using your personal credit cards to pay off business expenses, it can provide that shorter cash flow support, in my opinion, and you may take advantage of that 0% APR offers. And it can help like a new business manage expenses before its own credit lines are expenses. But then when you think about the risks and the considerations, personal credit utilization affects your personal credit score, right? Like you have to keep that in mind, even if you're paying on time. And if the balances really do outgrow the limit, it can impact your ability to just secure any personal financing that you might need in the future. And payments are still tied to your personal guarantee, so the risk ultimately does sit with you and not the business. And I think I would just use personal credit like sparingly if you need it, like sometimes for business expenses, only if absolutely necessary. Just keep them separated when possible and make sure, the business repays the personal credit promptly to just maintain that cash flow. And consider the 0% APR like offers very strategically, but don't obviously rely on them as like a substitute for building actual business credit. But that's a great question.
I just want to add on this part, while, if, as a startup, it will be like the only way to help a business to start up to use your personal credit. We recommend the business owner to keep their business and personal, accounts separate. So like there, it's important to do that. And just to let you know, if it comes to, we as a lender can do debt financing. If business has a debt, if the interest rate is high, we can do debt financing. But if you take a personal, like use a personal credit for the business, and then you want to go like refinance that, that will not be accepted. So we will not take a personal credit for like refinancing it, even though you can say that you have used it for the business, still it will not be accepted. So just try, again, we understand that sometimes you have to do it. It is, it's the only way to move forward, but in general practice, try to keep it separate.
Yeah, I definitely agree.
Let me, okay. Before like we go to that question, you asked if anyone wants to share
Yeah, if
their
anybody would
thoughts.
like to
Yes,
share, feel free
yes.
to.
Yeah, Shoshana said, it will help me grow my business more and also having funds to expand. I thought it would only show on your personal credit if you miss a payment. Shushan, I am not sure if this is like a question or if she's sharing an experience.
Yeah, I couldn't.
Yeah, Shoshana, if you would like to unmute yourself, you can unmute yourself and ask your question, or share your experience. Oh, okay. She said she was referring to the home loan. So, okay, this is not a business one. Okay, we can continue.
Okay, great. Um, yeah, I think this is just kind of like a snapshot that shows like the current landscape of the reporting. Just providing all the analytics scores, like complying with the federal state laws, and then just like businesses that use these report to the credit reporting like agencies. And I think the other thing I would also say is just that establishing this business credit provides like a financial safety for any like unforeseen circumstances or emergencies that you might have. So it ensures that your business has access to credit when needed, helping you weather, any challenging times or just seize any like unexpected opportunities. And overall, it's essential for just like stability, growth, and like sustainability. And putting it all together, you'll see um the the kind of the five like traditional loan underwriting C's of credit that are like regularly used. And this is just in terms of the capacity, collateral, your credit history, your conditions, and just character. And I think this is what really shows all of the a summary page of like what we've talked about so far, right? Um, how much like capacity you have, if it's like backed by anything which will give lenders more comfort, especially when you're starting out. Credit history that obviously makes a bulk of it to just see like what the track record has been in the past. And then eventually applies to both personal and business credit. And then on the far right side, you'll see a non-traditional data thing. That I think we have another slide on it. Let me just move on here. There we go. But yeah, I think this data refers to like the information beyond the traditional credit data that is used. And this is a wide range of like alternative data sources that provides insights into someone's behavior, right? This includes like maybe an individual or business's payment history with like non-credit accounts. So whether that's your utility bills, your rent payments, or any of like your subscription services. And these can provide like valuable insights into the individual or the business's like reliability. You have your bank account information as well. So like your income and spending patterns can offer a very comprehensive overview of like, your financial health. Sometimes online reviews, digital footprints, consumer behavior preferences, and like reputation also plays like a huge role. And sometimes you'll have your online lenders or peer-to-peer lending platforms gather and analyze alternative data to assess creditworthiness to make these like lending decisions. Um, I think those are some of the ones that I can think of in terms of like your non-traditional credit data that could be used. Um, And this also at the end of the day, like still helps lenders predict like the risk. But depending on who the lender is, right? Like if you're working on providing a startup loan, like consider yourself into like a lender, you'll care about like these five C's more versus like someone who's like a little bit in the mature phase of the business. Like you might not look at like everything. Maybe the collateral part gets kicked out because then you can move on to like more of like an unsecured like loan structure. Um, I think these are the three things that I would highly emphasize, just knowing your credit, knowing your lender, and just knowing your rights. Just keep that in mind. And I think lastly, um, on the point on around like credit reporting and like business operations, um, you want to access those reports that are eventually useful in helping evaluate, right, risks when hiring employees or just working with like any like customers or like clients. So I would say your small business reports information such as like any outstanding debts you might have about consumers or just other businesses to one or more of like the reporting agencies, right? And this is super important because this really helps you support your ability to manage risk when you do have like a lot of transactional activities going on with the customer. So just a good way to kind of keep in mind. Um, we already touched on all this where we have the different types of like score models available in different ranges, measuring some of the similar factors, just creating that business credit reporting agencies and other companies, why those are important, how the score mo models are tracked. Um, and yeah, I think this brings us to the end of our slides, but I'll open up, I think we're past like the hour, but we still have time. So if anybody wants to jump in, add any input to help others, or ask any questions, feel free to, yeah, shoot them over. But hopefully that
Okay.
was helpful.
Mhm. Absolutely. Uh, there is Katie asked, do you suggest checking the B's credit score of a potential customer before you let them order so that you are not extending credit to someone who is unworthy of credit?
So the questions you could offer to be in the middle, but it's to, do you suggest business? Could you just repeat it again? Sorry.
Uh, she asked, do you suggest checking the business credit score of a potential customer before you let them order so that you are not extending credit to someone who is unworthy of credit?
Yeah, I think that's a great question. So obviously it depends on like what the businesses, right? But I think my take on it is yes, for it's just a best practice for like risk management, right? Really checking a customer's like business credit will help you assess like their ability to pay on time. And especially it can just prevent like late payments if you're someone who's offering like the net 30 or the net 60 like terms um and just use, like just look at their payment history, like outstanding debt, just their credit score, just to kind of gauge risk. Like you don't obviously have to go like a lot into detail. But yes, for I would say for small or first time orders, you may decide to allow orders without a full credit check, but limit the order size. And then for larger or recurring orders, it's wise to just check the credit first and possibly set credit limits. And this also just helps you standardize your credit policy, in my opinion, just to make, and it makes it easier to like scale it efficiently. But that's a great question.
Thank you. There's another question Shoshana asked. She said, I have been at a stand still with building my business credit. I do have a credit card and it stays under 10% usage, but I cannot seem to have it grow. Can you give some pointers?
Yeah, that's a great question. So I'm not really sure like what exactly like the business is, but in terms of focusing on like just the credit aspect of it, your business credit utilization is stuck at 10%, and I'm assuming your credit score is not moving. Like we talked about earlier, like they are influenced by payment history, just the credit utilization, etc. I think this might be due to like several factors, right? If you only have maybe like a few accounts to report, there isn't enough data to move that score significantly. And then also the 10%, using only 10% of the available credit may actually limit the score improvement. They do like to see the bureaus, they do like to see like regular active use of the credit with like on-time repayment. So that could be one of the issues. And then um, like I said it to someone before, like some business credit cards or lenders don't report. Now I don't know the full picture here on like how many accounts you have, like how many are reported, etc. And then if you don't have like any aging accounts, then your accounts need time to mature before actually like impacting scores. I think just in terms of like key takeaways or things maybe that you could do is just have a higher percentage of credit, like maybe periodically and pay it off on time to show that you are responsible. Um, Adding those like smaller accounts just to report to the bureaus and then confirm that the existing accounts are actually reporting on time. And then just diversify the credit types, right? Like again, don't have the full history here, but maybe include cards like lines of credit or like vendor accounts, and then just checking those reports like regularly for like any like potential errors.
Thank you. Uh, there's another question. I think, Annabelle, this will be for you. Katie asked, would you be the person at Citibank to contact about corporate sponsorship of nonprofit events?
Yes, that is me. I am the community relations manager that works with PACE. So if Vartuhi, if you want to share my information, I'm
Sure.
happy to respond.
Definitely, I will do that. Thank you. There was another question that they asked if they can connect with Saloni, and I already responded no. We are so grateful Saloni is volunteering to do this, but she's not, in a position to support the client. So if there is any question, please feel free to connect with me. I will do my best to answer your questions or find the right, resources for you. So please, just don't hesitate to connect with me. I will share Annabelle's contact information also. If there's anything, related to those nonprofit events, please feel free to connect with her. But like, if there is any inquiry, those type of questions, please send, address those inquiries to me also.
Okay, awesome.
Let's see if there's any other questions. Let me check. So, if there is any other question, please feel free to ask your question. You can unmute, you can raise your hand and unmute yourself to ask your question. I'm also sharing the information for Annabelle, so that if there's anything related to nonprofit events, please feel free to connect with her. Let me see, there is, okay, I shared Annabelle's information in a chat box. Please, you can take it from there. There is another question from, can the structure of your LLC help or hurt your building your business credit?
That's a great question. I would say an LLC, obviously creates like a separate like legal entity, and this allows your business credit to like have that separate like LLC's like EIN, instead of just relying on your personal credit. And banks and vendors see an LLC as like a formal business entity, in my opinion, which can make them more willing to extend credit. And they require like the formal business structure, like articles of incorporation, to really qualify for the business loans and the lines of credit. And I think strategic tips would just be to use your LLC's EIN for all like vendor accounts, like credit cards, like loans, as well as just maintaining the accurate business records under the LLC's name. Um, does that help answer the question?
I would say yes, but let's see, Shoshana, do you have any, follow-up question?
And
Okay.
sorry, if that was more about like the structure, like I don't know
Yeah.
if that referred to like the single member versus like multi-member, but I can briefly touch on it as well. Like single member, obviously, like very easy to set up, and some lenders require like a personal guarantee, right, for credits or loans, and credit is tied directly to the owner's like EIN versus a multi-member is viewed as more like established if the members have more of like a stronger personal or like business credit, which can help you negotiate larger credit lines if needed. And the risk is kind of spread among like multiple owners. But regardless, like, formal separation from personal credit, I think is like the biggest takeaway here.
Thank you. Okay. I don't see any more questions, so we can stay for maybe another 2 minutes to see if there is any other question. Otherwise, oh, there is one more question. Let me see. Okay, they just said thank you. So we will stay for another 2 minutes if there will be any questions. And I would say I want to say thank you to everyone, and wish you a great rest of the day. Let me see. There is one more thing coming in. Oh, thank you. Thank you, everyone. Okay. Yeah, Paris. Sorry, I had it in my mind, but Paris asked about like $250,000 loan, which she said with LLC with an EIN can get a $250,000 loan under Trump bill. I'm not sure about that, but I want to just emphasize that no lender will lend you money because you have an EIN. Okay, so let's make it very clear. So when it comes to the lending, there are requirements. Underwriter has to go through those documents, and we always call it 5C. So they go through different, there are different areas that they have to check. So that 5C is your credit, cash flow, capital infusion, collateral, or character of the person. So there are factors that they have to go through. They have to evaluate the business, and based on that evaluation, they will agree with the loan or they will not agree. And even they agree based on the factors they discovered, the assessment of the risk. They will extend the terms based on that assessment. So again, it's like even now, Paris, you can apply for a $250,000 loan. So I'm just speaking about us, like case, we have the line up to 350,000 loan. But again, we go through underwriting process. So just because one business has an EIN doesn't mean that they will get they will not get anything if they don't have any financials. So you have to prove that the business is like generating cash flow and, and other, supporting information is good enough that, a lender can agree to extend the, loan to you or a credit line to you. So I just want to, Annabelle Saloni, if you want to add anything on this, please feel free to, just jump in.
I think you covered all the points.
Okay. Paris, if that answered your question, good. If not, just feel free to connect with me again, and we can discuss on this. But again, there is no such a loan only based on an EIN number. Okay, then. Thank you so much, everyone. Thank you, Saloni. It's so great to have you in our workshops. I always enjoy, having you, listening to you.
No, of course, pleasure to
There is
be here.
always something, even for us that, we day to day we work with and we have this type of questions. There is always something to learn. So thank you so much. And thank you, Annabelle, for coordinating this. We really appreciate our collaboration, our, work together. So, and I'm looking forward for the next one.
Thank you,
Awesome.
Fartuhi. Thank you for allowing Citi to be a part of your very important work. So we are very grateful to you.
Thank you. Thank you so much. And
Yes, thank you.
yeah, thank you, everyone. Have a great rest of the day. Bye-bye.
Bye.